Good evening, everyone. Let's make a quick sound test. Hopefully, everybody's doing well. And this is a member-only event tonight. Excited to be with everyone and everybody in the community. Good evening, Scott. Good evening, Jason. Good evening. Who is that? Sammy, Paul, Jaime. Good evening. Good to see you. Jaime, Sergio. Good evening. Chris, everybody. Good evening. I have 9 steps to help you guys each time you approach your charts, whether you use our tools or not, or you use the retail or the professional tools, right? There's a 9-step. Your mic is open, Fred. So there's a 9-step that I like to use. So the first step usually is to know your main trend, which is your weekly and monthly charts, versus your intermediary trend, which is your daily, 4-hour, 60-minute, and 5-minute chart for us. And it's very important because if you know, for instance, that your main trend on your chart is up, right? So let's say this is your main trend up, and it stays well, and it stays, and it's up. The day you have an intermediary retracement, let's say you have higher highs, higher lows, higher highs, higher lows, and you have your intermediary trend signal, which is your 60-minute charts, your daily, and your 5-minute, going back down. All it does is retest support within your main trend here for a buy opportunity, right? So it's always important because the way I trade usually is I trade less size on an intermediary trade that is not in synergy with the main trend. So if the main trend is up and the intermediary trend goes down, and my usual contracts will be 10, then I'll probably do 3 on a counter trend trade. Because all you are doing really is one of the biggest sins from most traders is you counter trend. So sometimes there's great ranges. You might have a 20-point counter trading pullback, but you got to know when you have a main trend and an intermediary trend. So we are blessed because in our full Pro Tool it's completely automated. If not, you got to have some system to recognize your weekly, monthly trend versus your intermediary trends, guys. Cross time frame, In the old days, I used to pull the weekly, monthly, daily, like those 6 charts, and now I just go here and I'm like, bang, I'm right there and checking what's going on with my full Pro Tools, and our volume indicator. Now, most of you guys have those tools which are the buy zone and the caution zone and the sell zone. But if you notice this blue line, the power line here, which is the 24 EMA, right? All it does is help you for only one chart, the hourly charts, saying like what's the trend here, and now this is resistance here, kind of felt here. Is it going to be 28.30, 28.35 intraday reject again, right? And also we use the MACD's 12.26.9, which you have available on all platforms, right? But the key here, when you add extreme buy, we are looking to sell, as you see it rejected, and when we are in the extreme sell, we are looking to buy the market. And then you have this most difficult area, which is the caution zone there, this orange area. And usually it's ping pong, as you've seen today. We went from one side of the caution to the other side of the caution, and we are playing ping pong. Typically, when I see that, that's what I told my guys this morning. You need to be very, very careful because essentially you don't have an edge. You are at mid-distance from here to here and mid-distance from where we are to the top. So you essentially have a 50% chance of making money. Well, I don't know about you guys, but I don't take trades where I have 50% chance of money because in my world, it's called gambling. And I don't like to gamble, okay? I like to invest, swing trade, or day trade when I'm really sure of what I'm doing. And that's going to be helpful, okay? So for instance, this morning, I told my guys to buy Amazon, and I also shorted Square. So look at the Square here. The overall uptrend on Square main trend on the weekly is up. Up arrow, cross MACD, blue dot, blue segment. So the software tells me be careful because each time it comes back to support, which is that 70, 73 area there. Like see that blue dash 70, 73, the top of the monthly here, right? Be careful because they can snap back. So this morning, one of my guys made about $600 shorting the short term, the open on Square. So you look at the 60-minute chart this morning on Square, right? And you see that Square for the past 3 days is deteriorating. Cross, recross, retest, lower high, down arrow, ping that, and it goes. It try again, same this morning. So I got the signal this morning, and it helped me to short the swing from 76 to about the 73, 74 area. Okay? But I know I'm counter trending within the main trend because the main trend tells me this is a buy here. So you need to be very, very careful, guys. So when I usually do a counter trend like this with an intermediary trend signal, I do a day trade. I'm in and I'm out because I know I'm going against the main force for now at least. Okay? Although I want to short Square very badly, it's still showing a main trend up, right? Amazon. Look at Amazon for the past 3 days. For the past 5 days, like almost a week, Amazon is flashing an up arrow on our tool at 1600. Cross, recross, retest the important support. The red dashes are the most important. Every hour after that, almost a blue dot, which gives me the main trend. The blue dot, by the way, are the main trend signal to stay in the trend. The up arrow, down arrow is my intermediary trend on the full pro tool. So up arrow, down arrow. And see, this trade gave you in a week a 100-point move in the market. So this morning I was with my guys. I said, guys, each time you have a retrace on Amazon, this is a buy here. This is a buy. Actually, I called the 73 buy in the live room this morning. They were almost a little bit less than 400 people this morning. So very, very, very profound because if you don't know to read the charts, your entry and exit, guess what? Your options will be wrong. Your trend will be wrong. Everything will be wrong. Does that make sense, everyone? So your reading of the charts, you got to be passionate. Whether you use our tools or you use your own system, you got to have passion for your charts. You know, is my charts? You know, it's like you got to be interested about charts. You need to be passionate about charts because, you know, is this chart making higher highs, higher lows? Is this chart breaking new down flag, breaking up, making new highs? You know, is it pulling back and holding the 24 moving average each time? You know, where's the MACD, up or down, coming into this morning? You know, is it cross up? Is it cross down? Am I going against? So there's a couple of synergies. So there's 9 steps that I propose to help everybody. And then I will go through the rules of third, my trade setup, the chart formations, right? And I'll take Q&A when we'll wrap it up hopefully before 9 o'clock, okay? Also, I wanted to pull this PowerPoint, and for some reason, it just doesn't want to open for me today. It's kind of strange. Or maybe it is already open. It shows it's there, but it's not opening. You know what? Maybe I should close everything. How do you? Yeah, I have the wheel of death with this. Oh. a task manager there. I'm going to on task. PowerPoint, which start the program. Yeah. There's some problem with the, maybe it was behind my signal. Maybe you're right, Scott. Maybe it was behind. No. Let me see. Oh, here we are back. Let's see. So let me show you. And I'm going to piggyback a little bit from where we left off Saturday at the masterclass event and try to help the entire community, you know, to help you guys really understand some of the important stuff here. Okay? So, and you'll see it better, and then I'll give you some notes. Can everybody see the slide now? Is that better visually? Should be better. Okay, please let me know if you see the chart, if it's better, everybody. Okay, cool. So here's the 9 steps. Step number 1, trend, main trend versus intermediary trend. We just talked about it. Step number 2, you need to construct every day your box. You know, where's your buy zone, your caution zone, your sell zone. Okay, and where are the open space for profit? Okay, so a couple of things here, 2 and 3. Everything that we do, we box in the morning. We spend a lot of time, guys, in the morning. I mean, if I show you this morning, you know, look at this morning analysis from the mastery room if you were not around. I mean, look here. Tone of the FOMC. We do a tone of the day. We do our ranges. We have a game plan. We talk about everything, guys. You know, and that takes us about an hour, you know. And look what I said, cash protection, empowerment, be patient, consistent small size helps you to be consistent. Bigger size will blow up your account today on FOMC. I talk about the jerking reaction. I talk about the range, 32, 42. Then I talk about, look what I said here, right there. It's like reading the journal after it happened. 28, 20, 28, 42. We went to 28, 49 and it was game over. Okay, close to these things. Yesterday's high was 28, 58. So you need to prepare in the morning. The person who is prepared wins everything in life. Okay, so the way I've been told and taught when I was in prop trading and hedge funds is you cannot come in the morning with an assumption, oh, markets trade up, or markets trade down. What we do is we dissect the chart with our tools and we define the box for the day. That box is where we expect the difficult part of the day, which is the caution zone. Then above that caution zone, we expect space into the buy zone, but it's the way we think wealth differently is at the top of the buy zone. If I have a trade setup and a chart formation, we want to sell at the top of that buy zone. Then we have space to the sell zone. At the bottom of the sell zone, I want to buy, you know. And all of this have space. They have ranges. These have space, right? But the caution zone, your box, is the only thing that is difficult every day because there's no space. It's a difficult thing to do every day, and we do everything by automation. So when you guys come in the morning and you see that caution zone, this morning 20 area to the 42, 43 area on the ES, right? It's all automated, predicated from the full Pro Tool here because we have 27 zones here. So we go ES-F. And so if you look at the tools, right? All we did is look for boxes. So we do a box from resistance. This is the resistance, the trading zones, 45 area to the bottom here. Or I do another box, which is the 2800. I think I had the 2790 here. See? So I have two boxes. And I know above this box and below this box, the market puke. Does that make sense, everybody? I know after that, when I compress, the market puke, So then I have space for the short to go all the way to 27.50. Then I have space to the long to go to the head and shoulder, this famous head and shoulder that we have done on the daily chart and the weekly chart. So people say, Mark, how did you know? Because this is amazing to me too. I did a video on YouTube. I did a lot of video on YouTube that helped a lot of people for the past 3-4 months. I've done those videos now for the past 11 years. So it's the cool part of social media. It's well documented. And if you look at one of the videos that I've done at the beginning of January when I was buying the market, what was very cool, and this is where the power of knowing where you are to where it's going to be, I did a video called Stock Rebound in 2019. That video was done on January the 3rd. On January the 3rd, when that video was around 24.75, do you guys see that? Yes or no? Give me a quick yes, no. Everybody tonight. 24.75, it's in black and white on that video on YouTube from January the 3rd. I say, look at the head and shoulder of 28.75, or our tool here at 28.50. 3 months later, we are there. So it's not by accident. This is where we have the edge to go from where we are to where we are going to be. Because the full Pro Tool have extremely helped me, to do over 38% return on one account. And remember, our goal as a community, when we think wealth differently and want to have long-term investing, day trading and swing trading intelligently, is to strive for a 20% rate of return. If in your swing trading and day trading you have 20% rate of return or more, you are golden, guys, because then you can blend with dividend, cover calls, and other strategy in your long-term investing that compounds tax-free, tax-deferred, who has an asset protection and a tax efficiency component. But when you look at this video 3 months ago, guys, almost 3 months ago now, where the market was at 24.75, not only did we kill the short, calling the short on October the 5th, down arrow, cross retest, lower high, ping that all the way from red dash to red dash, but we were also killing the rebound that you've seen on social media on Instagram. So you got to have processes, whether you use the tool or not, doesn't matter. What I want is you guys to have those steps and processes. So looking at your zone, looking at your space, what underlying are you going to trade? So in the morning, even for the retail tools, what we do, we have the trade navigator like this, even if you don't have the full Pro Tool. For the guys who cannot afford the full Pro Tool, we have the trade navigator. I come here and I look at DTZ, the 10 market or the 11 market or whatever, right? And then I'm going to do the same exercise that I told you. What has space and what doesn't have space? So we have Facebook too. Which one? So look. So then I come, right? And I'm like, okay, this one is caution zone, income trade. This one, caution zone, income trade. This one, caution zone. This one, it's a buy. It's coming from the sell zone. This one, Netflix, same. It's a buy coming from the sell zone. NQ, this is caution zone. Caution zone, SPX, caution zone. That means income for me. Income means what? Credit spread here. Call credit spread here, put credit spread here. I do an iron condor. Or at least I do some type of an income and I stay out of the ranges where I'm going to lose money. Facebook, income. See, caution zone still. This 160, 170 area. Crude, went and broke up. See? So this allows me to see quickly space, no space, caution zone, no caution zone. But don't forget, all those numbers, those 11 instruments that we have we have XBT and TLT, comes from the fact that Fred, who is here tonight, who is a 30-year trading veteran and has been a previous student of ours has been with us over 5 years. He plugged those zones using the full Pro Tool and creating those buy zone, caution zones manually, because those have 27 zones. On top of this, those have the intermediary trend signal, the main trend, and the intermediary trend. Now, in the steps, everybody, you need also to understand what to trade and what not to trade, and understand the type of caution zone ranges that you're looking for. Typically, an ES caution zone is going to be about 10 to 15 points. Okay, if you go over 15 points on a box, on the ES, you are too wide. Okay, you need to understand the volatility ranges percentile, because you want to know, am I going to buy income? You know, am I going to be a directional options trader, or am I going to be an income trader? Also, it's important to understand the percentile and the IV also to buy or sell the stocks. Okay, so all of this applied for buying the stocks first, but it applies for your options. You know, it's all about entry and exit. Okay, what option strategies are you going to do today before the market open? Are you loading your option a credit spread on your save? You know, there's something where you can load your credit spread and just reopen it and send it. But you save it like on Think or Swim. You can save it so you're prepared to trigger the order. Do you understand the rule of offer? Do you understand the U formations? Okay. And last but not least, you know, what business are you in? Are you in the business of collecting out of the money premium, or are you in the business of being more aggressive at the money, or being a directional trader? You need to understand your personality. Some traders in the rooms don't have the personality to be directional trader. 90% of the directional traders lose money. It doesn't make you stupid. It doesn't make you any less good. It makes you smart, as a matter of fact, to recognize your limitation, that directional trading is not for you, but income trading out of the money is for you. And some do both. I do both, obviously. I've done this for almost 25 years, right? You know, I like to have as many tools in my toolbox, right, to profit. Now, one thing that I must stress for everybody in the room, I'll go in the rule of third. Make sure when you do a directional or even an income trade, credit spread, each time you approach the $300 loss, which is 1% loss on the $30,000 account, even if you have a $60,000 account, I'm telling you by experience, cannot explain it scientifically. All I can explain it by is by the tear, blood, and successes I had in my life, right? Trading millions of dollars every year. That the $300 is a big problem. So if you have an account between $30,000 and $60,000 and you start losing $300, you either have to defend, and that's what we are known for in the industry, to back ratio with our tools, credit spread, and defending credit spread for max profit and for defense, or you need to get out and keep your losses small, guys. $300, I cannot explain why. It is a very magic number for everybody in our community to stay safe. Okay, so let's get moving. Now, you see, know your chart, know the trend, see also the change in trend, down arrow, ping that, momentum down, up arrow, above the 24 EMA, you know, cross, recross, hold the higher low on the zones, and go to the most important dashes, the red dashes. Understand the pattern, understand which charts are the main one and which ones are the intermediary one. It's like looking at the trees from above. Now, we talked about the box. Everything that you should do should be in a box. As soon as the box break, boom, you have a break, you know, and you want to assess how much more space you have above and below the box on the break. Also, everyone, for the people who do not have the full Pro Tool, look at stuff like this that are helpful. 24 EMA with the 200 moving average crosses on different time frame. Watch the 60-minute chart, 4-hour chart, daily chart, 60-minute chart, 5-minute charts. I don't have to do that because all my charts have the same 27 zones. So each time I look at any time frame, it's like looking at 10 time frames. Understand good support and resistance. Understand shift of momentum. And I'm going to help you understanding the shift of momentum with our 3-trade setup and chart formation. You can use also a Bollinger or a Keltner band, something that shows you if there's an exhaustion, like an elastic that has been stretched too much in one direction or another. You can also trade just ETF. You know, some people just do income strategies on ETF. They don't do anything else. They don't even do individual stocks, right? This is very important, right? Understand how to choose your strikes. So let me share with you 3-trade setup, and I'm going to teach you how to read the tape in 10 minutes tonight. In less than 10 minutes tonight, I'm going to teach you how to read the tape. This is the best way that I have explained it now for almost 16 years, all over the internet, all over everywhere. It's documented. So, number one, 3-trade setup. Forget this one, and we'll start here. 1, 2, and 3. Whether it's support and resistance, there's 3 setups that will shift the energy from up to down. So the market goes up, higher bid, higher bid, higher bid, higher bid, higher bid, higher bid. It reach here on neutral point. It's like physics. And then it crosses and it comes back down. Cross, recross, that's a shift. That's trade setup number 1. Okay? That's your shift. Cross, recross, retest lower high. It's my favorite one. So it's cross, recross, lower high for a short, or here, cross, recross, higher low for a long from the bottom day trading zone, right? So those are 2 trade setup that shift the momentum. Is very important. Why? Let me show you how to read the tape, and then we'll go to the last trade setup, the ping pong channel here, and the rules of third. Now, if I am a little man on the street, everyone, and I kick a ball, I play soccer, the ball goes up, 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 up to a certain point called the neutral point. Because by touching the incline of the street, it slows down the ball. That's your higher bid, higher bid, higher bid on your tape. What happened when the ball reached the neutral point in which it can no longer go higher? What happened to that ball? Anybody? Anybody awake? What happened to that ball when it goes a neutral point? It went up, you kick it at one point, that's it, it loses momentum, it's at neutral. What does it do essentially, energy-wise? It doesn't just stop. The ball was going this way. It is at a neutral point where it has no force to go higher. Where is it going? It's coming back to you guys. It's going down. And that's the best way you can understand how to read the tape. This is my gift to you tonight, free. Yeah? Because that was not a class on tape reading. That was a class on master option strategy and stocks. So when it comes back, you have a shift of momentum. That's the cross, recross here. You reach the neutral point. Let's clean the chart. You reach the neutral point here. The market was going up. Neutral. Now we're going down. And we recross. It's confirmed by recrossing an important resistance. And the reason they always go above the important resistance that the institutions are looking, since a lot of my tools have been predicated on institutions, tools and levels that institutions are looking at because I used to work for them, right? So the reason they always go above it is because they take the stops. They take your stops, create a little bit more momentum, and then reach the neutral point. At which point, cross, recross. When it recross, it confirms the shift. And even better, cross, recross, retest lower high, confirms even better the shift. That's my trade setup number 2 that I like the best. This is my bread and butter number 2. Okay, now be careful. Let me show you something. It could cross, go down, go up, and do a double top. Is that still a cross, recross trade setup? Yes or no? Yes. But look what happened now. There's a chart formation. There's a double top. So the ideal is to have the trade set up, the overall idea of the cross, recross, plus the chart formation together. Does that make sense, everyone? Yeah? This is really why it helps you guys. That changes your life there, right there. Because most traders, they get taken here. The short, boom, they make a new high, you get stopped. Then it goes, and you never re-enter the trade. Or shoulder, head, shoulder. But guess what? Whether it's a double top or head and shoulder, you always want to short the second top. See, that's another gift I'm giving you today. So I'm always looking for that second top, because this is where I know I have a higher probability of success. Because whether it's a head and shoulder coming back, or whether it's a double top, the second top is always the highest. Now, last trade setup for the evening, the ping pong trade. Market goes up, comes back through the zones, holds one time, two times. Two lines form a line. That's the definition in mathematics of a line. So you have two parallel lines at that point with 2 points at the bottom, 2 points at the top. Now, here where it comes very important to know your intermediary trend. What is your 60-minute chart, 5-minute chart, and daily chart showing versus your weekly and monthly chart? Okay, and I have a 4-hour chart here for you. Okay, so what is it showing? Yeah, and then if it's down here, I got to be careful, because we might come here to the support of, let's say, the main trend if the main trend is up here. So typically, a big mistake that traders do is they short here at the bottom, here or here. That's not how it works. Wait for to touch, and you know that when your cluster or your channel, ping pong channel, is defined, the third touch gives you a 66% chance, 66% chance of winning, because it's proven once and twice before that you short here at the top and it will work. Okay, and then when it breaks, maybe when it recross the DTZ line, somewhere in between, you can start with 50% of your size here, 50% of your size here. Your average price is somewhere here. It's better than chasing here, where you can be squeezed again into this channel. And by the way, a lot of the channel could be what? Could not it be a caution zone too? Aha, that too could be a caution zone, guys. So you need to be careful. Next, define your main trend, intermediary trend, position size, and strategy. We talked about that. The power of the 24 EMA, we talked about that. Now, here it is. As I said before, we have 3 trades set up, plus what? You need the chart formation each time. So you have the cross, recross, you have the cross, recross, lower high, or you have the ping pong trade, third touch. In addition to that, you have to add the chart formation. So head and shoulder, I told you, short here, second leg. Same here, if it's an inverse head and shoulder, buy the second dip that is lower, right? And same on the double top and same on the double bottom, everybody. Okay, next. Let's go through the rule of third, okay? Now, the rule of third dictates, everybody, right, that you take a range. So let's say I look at my SPX today and I see a 90-point range. So I'm going to, let's say, divide by 28.75, 28.45, and 28.15. I know if I am a buyer, statistically, if I'm a buyer towards the last third, I have 66% chance of success if the trend is up. If the trend is down and I short here, I have 66% chance of success. But now, what happens if I buy or short here? What's my probability of success? Anyone? Middle of the range is here. What's my probability of success? 50% chance of success. Would you go directional here if you had 50% chance of success? Or would you do an iron condor butterfly, some type of a neutral strategy? Does that make sense, everybody? Yeah. That would be super helpful, right? So that helps you to master entry and exit with clockwise precision, everybody, all that stuff. Is that helpful? Those stuff have changed my life. They are simple concepts. They've changed my life, the way I trade, the way I enter, the way I exit, the way I look at the market in a very simple way. The box, the rule of third, the trade setup, the chart formation. Those have been a gift in my life, okay? Whether I invest long-term, I swing trade, or I day trade, everybody. You know, all of those have been gift in my life. So here are a couple of examples. Caution zone, you have the double top, goes to the other side of the caution zone. They go sideways here on the top. They were lower high on the MACD. Next. Same here. See, keep on looking. Also look at symmetry. They touch once, they touch twice, they touch 3 times. Remember we talked about 3 times? Here, 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 boom, head and shoulder. See? And you keep on looking where around the zones they react. Okay? Next, it's not a bad idea to know about candlesticks, guys. I am not really big at candlesticks, guys, but it's kind of important to know how a candlesticks work. You know, when you have a clear candle, it's an open and a close. If it's a negative short candle, you know, it's an open and a close. Understand some basic candlestick reversal, you know, bullish RME, bullish engulfing, bullish RME, you know, and here bearish, yeah. They go up, they go up, they go up, boom, they take the previous low, it's game over. So understand a little bit, but this means squat if it's not around the day trading zones, support and resistance. It doesn't mean squat if you don't know your main trend, your intermediary trend, and your retracement area. Notice that not only do we have uptrend and main trend, but we have retracement area. I know tonight already that the 28.34, 28.45 will present a lower high, very important resistance for the evening if they decide to complete at 27.90 before they rebound again. Okay, so those are the stuff you need to know, because where it is to where it's going, it's possible. For now, so long the market is not above 28.45 on the ES tonight, I am not very bullish. So those are very, very important pattern and stuff like this that I'm sharing with you. Okay, so the other stuff are stuff that I will finish with the Mastery Trader tomorrow morning after the class. But I wanted to share with you some of those stuff, guys, and make sure that they are helpful to you, you know, and understand, you know, to keep your risk consistent when you make a credit spread, the way you make profit. You know, when you look at our tools, if you look at the retail tools and you cannot afford the professional tools, obviously, let me show you some inflection points where things happen. Well, here's the first inflection point. top of the buy zone for a sell, and in between here, the top of the caution zone and the bottom of the buy zone, there is another inflection point where things happen, where things get rejected or continues. Same here, between the caution zone bottom and the top of the sell zone, there is a reaction point, and the last one here at the bottom of the sell zone for a buy. Buy here, sell here, and then here you can construct the ping pong trade or the income play. And those are the 4 points where you will see mainly reactions on our tools, and that's it. Yeah, I hope that this nice, quick and sweet recap tonight is helpful to everybody in the room and to help you. So let's go again and let's recap for everybody watching this. Recap number 1, pick a strategy with the highest probability of success. Give yourself a trade location. Trade the edges of the distribution curve, caution zone, buy zone, caution and sell zone. Give yourself the gift of time. Look for 3 trade setup and the chart formation combined for shift of momentum. If you don't have the full Pro Tool, see if you can use a 24 EMA, a 200 moving average, use the rule of third, and good luck. Use the MACDs and whatever you can find that you trust. Stay with the main trend, understand the counter trend, understand how to size and use the strategy, everybody. You know, and most importantly, I think what's very important tonight is you keep yourself gentle with yourself. You know, be gentle with yourself. You know, you don't go from this guy to this guy overnight. You know, it takes a little bit of patience with yourself. You know, and if you trade small sizes like going at the gym, you will learn that business. I think the most beautiful thing to learn is 100 shares and 101 contract. If you cannot master 1 contract and 100 shares, you have no business investing in the stock market, and you have no business investing in options for more money. Why use more money and take the risk to lose more money if you cannot even master 1? Okay. And my hope tonight is that whatever I share with you tonight not only will have 1 or 2 good nuggets for you, but knowing is not enough. You must apply, guys. Willing is not enough. You must do. So hopefully you will do some of the stuff that we gave you tonight. For the people who are around, I'm going to be nice. I'm going to try to give you some of the notes here. The cluster, the charts, the cross-recross, you know, and let me give you everything. If you guys are patient enough, I'm going to put the logo. We'll secure everything. Fred, if you want to come, jump in. If you guys have Q&A, please jump in the Q&A. I mean, there's nothing for sale tonight. It's really about helping everybody from Saturday, you know, get from where you are to where you want to be, even though that was not the purpose of the class. Saturday was about mastering options 2019, which I had not done a class for over a year and a half on options, you know, live. And the stocks, this needs to help you use the full Pro Tool or the retail tools, or understand simple concept that will change your trading. It's not if. I know it will change your trading the way it will change my trading, and all you have to do is keep an open mind with everything that I said and review the recording. If we send a recording, review the recording, guys. You know, go deep into your entry exit clockwise precision. So entry exits 2019 clockwise precision, simple but powerful concept. Okay, and hopefully that was helpful to everybody. Simple and powerful concepts. Okay, I'm going to do this, and I will take another 10 minutes of Q&A, guys, and I'll be on my way. I have my kids waiting. Okay, but I'll be glad to do that for everybody. Fred, anything you want to add to the conversation? I mean, Fred does your buy zone every morning.
I think the most important thing today is that how these levels and all these things develop. We were actually able to see today with pretty good accuracy that we were going to be choppy. We were going to have some problems in the beginning. And until we finally got to that point, you could see it here on this chart here, until we finally got to that point, we went down to that extreme. It was choppy. It's a little hard to see here, but when you're trading it live, what is this mark here, a 60-minute? Yeah, 1 hour. So if you're on a smaller, a 15 or a 5, you would have seen it. And then it developed into that trade. And the thing is the basic idea was to try to keep you out of trouble before you got into it, because the market has the tendency to fool you and bring you into a spot where you don't want to be. And then finally you got down to the levels were just very, very much on today. And when we hit that level and we had that setup, it built up enough energy to take us back up. And the timing, and I think everything was just right, was a great move. And then it came down and retraced again. There were actually 2 good moves in there, but that is always, you know, when you have a big expansion and that energy lets off, it's not going to take much for it to retrace and come back down again. And
Guys, I'm going to
kind of watch it.
I'm going to share my notes with the people who wants the note and people who wants to leave. Everybody else who wants to stay for Q&A, I'll be glad to. I'll be glad to answer any questions, guys. I hope it was helpful. You know, I tried to make a little bit of a quick and sweet event tonight, but it goes to the point and where it needs to go. Guys, we sent you a free PDF with the notes and the stuff you can take on tonight's major points. I'll start answering some questions for anybody. Let's see who we have. Let me move this. Hold on, the account went up here. So what did you say? Okay, let's see here. Okay. Yeah, by the way, this account, I'll show you here. I don't know if I can show you. Do you guys see the account with the stocks trade on Amazon and the square we talked about earlier on, guys? Those are the trade we took this morning with the guys in the room. So I made about $570 on Amazon. I still have 5 shares from 1784. It's 1798 at the close, 14 points, and the square here. So when you look at the charts here, up, down, crazy like this, we told our guys to be very careful with SPX this morning because we felt the range was about this 20-25 points this morning. And so we told the guys, you know, go here, use those. Okay. Let's take a few questions and I have to go, guys. And hopefully that was super helpful for most people. Okay. Paul Jaime, as always, is awesome to see you guys. The guys that I know that have been supporting the community now for over 10 years, guys. You know, we have been at this 16 years. We still have guys that are with us 10 years, guys. Say would the mastery, guys. I will answer some of the questions tomorrow because I'll see you tomorrow morning anyway. Carlos Molina, long time see. Just look here, Carlos. Here's the zone, my friend. Just take a snapshot of the zone, Carlos. Help yourself. You still trading the future, Carlos? What is it that you trade these days? I remember you. Long time ago. Okay, cool. Options and futures. Okay, Carlos, cool. Next. Is it possible, Nicholas Churtsy, to look at CMG? Yeah, but I don't understand why people trade stocks like CMG, guys. Those are the type of stocks, they'll kill you. Why don't you stick to the Apple, the Facebook, the Netflix, the Amazon, the Baba, stuff like CMG, guys, it will kill you. I know so many people that have been killed by this stock, it's not even funny. So let's go with a weekly chart on this. I'll help you quickly and then I have to go. So main trend is up, very strong MACD, very strong blue dot. I would compress everything here and I will look for the target here. You might have a target coming at the 725, that shoulder or this cluster of zones here, 690, 690, 727. Now your shift of momentum where it's going to start puking is if it recross here that 634, 640 area. 634, 640 recross on your CMG. So see you had the 690 and whatever I gave you at the 700 something, head and shoulder. If it recrossed this 640, 635 area, then it's game over, it's coming back here, which is 574, 510, okay? But again, I know this stock very well, and this is not a stock to trade for people who are professional traders. But no problem, I'll look at it. Okay, next, no problem, Nicholas. Nadu, you still have, no, oh, who is it? Carlos? FTNT bull puts going. Yeah, well, I gave FTNT to everybody. Good. What else? Nadu, you're welcome. Greg, for directional day trades on the S&P, do you prefer a mini future or options? It's a great question. I prefer the puts on the downside. I prefer the future on the rebound. I don't like buying calls. Calls is a sucker's game. 90% of the people lose money at the end, you know, because when the market rebounds, the IV goes down. It doesn't help your calls. Let's see, Doug, what time frame do you use during the day? 60-minute chart, Doug. 60-minute chart, but all my decisions are being made on the weekly. So I'm a big fan of the weekly and the 60-minute chart. Let's see. Stuart Krause, we've already went to 1800 by a point or two on Amazon. I think Amazon may, depending on what the market does, the Amazon, from what I saw, may come back around here. This 1838 area, 1838, 1880, guys. You know, 1838, 1860, but I would be very careful about this. You know, you got to understand this 2000, 1900 on Amazon is going to be a big problem. As soon as Amazon goes there and recross, this 1800 is game over. That's that cross, recross. You will see Amazon within the next 3 to 5 years, I'll be here. At one point, you'll be able to get Amazon around the $900 range. And this is where you need to buy Amazon like crazy. Because I love the company. I don't like the valuation. Okay, I love you guys. I will see you tomorrow. You have a great evening. Hopefully that was helpful. We try to invite and have you guys around us. You take care, everybody.